I'm Bert Hunter. I'm the Chief Investment Officer for Connecticut's Green Bank. If you saw anywhere that I was referred to as being with the Clean Energy Finance and Investment Authority, that was our original name, but we had that changed in statute to something that would resonate with folks. Everyone knows what a bank is, and you put green in it, and they say, okay, I think I get it, as opposed to some bureaucratic name like we had before. So thank you for having me here today. Thank you to Shauna and Princeton University for hosting us. I think this is great. It's just fantastic, the kind of activity and sustainability that's going on in this campus, which is really just seems to be a microcosm of what is going on nationally, and we're seeing those impacts and effects in our own state. Thank you, Victoria and Jonathan, as well. It's just great that you're leading the way for PACE in New Jersey and working so hard on it. In fact, I want you to all give Jonathan and Victoria a round of applause.
One second here, I want to show you that you mentioned walking around. You can use this. Which one? And I want to also tell you that Gus Escher, who is in the audience, who will be facilitating one panel, we're a threesome in PACE right now.
Great. So my focus is going to be on commercial PACE. As David said, there's residential PACE as well. In Connecticut, we passed Connecticut PACE. I think the map said 2013, but it was actually mid-2012. We actually launched the program in 2013 after getting the framework together, all of our guidelines, etc. But it actually passed in legislation in 2012. So this is the backdrop for Connecticut. Perhaps some of this will resonate with you here in New Jersey. We have very high energy costs. I'll show you a graphic on that to drive that home. The highest in the lower 48 states. We have very old, inefficient building stock. It's just all over the place. And buildings are the biggest consumers of energy in the country. We need cleaner and cheaper energy sources. We're all about diversifying our energy mix. We're largely a natural gas at the margin. That has some very distinct impacts, as we saw a winter ago when the cost of electricity for many households went up to 30 cents a kilowatt hour if they were buying it from, because we have decoupling in our state, so you get distribution and transmission distribution separate from your actual commodity cost of electricity. So that was kind of a shock. And grid reliability, we heard about Superstorm Sandy, but we had other storms over the last few years, and so we're all about trying to do things that help us with resilience. So this is a picture of the energy costs in the United States by region. You can see that it actually stops there in the middle of the U.S. This is commercial and industrial because that's my focus. Residential, you'll find, is going to be a cut above. But if you look at the Mid-Atlantic, so that's where New Jersey is, a bit higher. But, there we go. We take the prize in Connecticut. Something we're not particularly proud of, but something we have to deal with. So that really forms the backdrop for a lot of emphasis on energy efficiency as well as solar PV. So I mentioned that the statute was passed in 2012. These are some of the components. It covers commercial, industrial, multifamily properties. Multifamily means anything with 5 living units or more. Requires the consent of the existing mortgage lender. As David said, it puts a senior lien on the property, and the way our statute works is we have to get the consent of the mortgage holder. We've actually been very successful with that. We've had 35 banks that have consented, and in fact, it is quite rare these days that we do not get consent. And why is that? And that's because it actually improves the net operating PACE, improves the net operating income on the property, so it actually improves the quality of the collateral as well as coverage ratios for the underlying mortgage. And that goes into the next item, which is the savings to investment ratio, or SIR. By statute, we have to be able to demonstrate that the savings on the PACE with a PACE lien exceeds the assessment annually. So, in fact, I'm sorry, it's not annually, it's over the term of the assessment. So if it's a 15-year assessment, then all those assessments have to be covered by energy savings by at least $1 more, or else we can't put that lien on the property. It's a statewide program. So the Green Bank administers the program throughout the state. That has some specific advantages. Municipalities have to opt in, however. We have 500 and some municipalities throughout New Jersey. We have 169. But we have many of those. In fact, I think we're north of 100 right now in terms of municipalities. We're covering about 90% of the commercial and industrial space in the state already. And in terms of what you can do with financing on for CPACE, David mentioned a number of things, everything energy efficiency, renewables. We expanded our statute over the last couple of years to include microgrids, very important in our state, getting back to the resiliency point, and shared energy or district energy. I believe Princeton has a district energy loop, or they're looking at putting in a hot water loop or has a steam loop. I'm sure there is one on this campus. So things of that sort, we also cover that. Our role in CPACE as the administrator, we're responsible, as I mentioned, for designing the whole program. We work with the municipalities to get them to opt in. We work with property owners to explain the program. We work with contractors to make sure that they understood how they could best sell the program, and we administer the overall arrangements, including working with the municipalities to place the lien on the properties. We work on an outsourced basis in that middle block there with Sustainable Real Estate Solutions, who confirms the energy savings. So that's outsourced to confirm that the savings investment ratio exceeds 1. We do the financial diligence in-house on the PACE funds that are advanced. So currently, we're advancing just about in fact, entirely 100% of the PACE funds in the state using a warehouse that is on our balance sheet. It's about a $40 million warehouse, and we're doing all that financing. So we do the construction advances, etc. We work with a servicer called Portland Global, one of the key elements that we put in place, and so that this thing runs really like a well-oiled machine. We work with the property owner to secure lender consent, which is, as I said, a requirement of the program. And we work to attract private capital. We have several capital providers in our program, but since there was a lack of familiarity about how PACE works, how capital is advanced through the program, we had to take the initial steps, use our balance sheet, get the programs running. Now we have a standard offer provision where we will work with capital providers, even work with credit-enhanced transactions so that they can be lenders in PACE and participate in this activity. But right now, we're doing all of the lending. We've actually sold down a portfolio of $30 million worth of PACE assessments. And so it's clear, just like with the Renovate securitization in California, that the capital markets like PACE. So here are some of the achievements. I already mentioned a number of them. I won't go into this in detail. This will be available to you. But I will say that our balance sheet has been stressed by the actual demand in the market. We've done $75 million worth of transactions in 18 months. And so we are in the process of raising a $50 to $100 million private warehouse facility with participants in the capital markets. So this gives you an idea of the progress that we've had. The first 6 months, just getting off the ground, we had very few transactions. But as word got out and success really feeds on itself, and property owners get to share the word, how much money they're saving, 100% financing up front. You can see the progression of this as to the latest 6-month period, we've exceeded $30 million in transactions. And as I said, $75 million overall, and we're going north of that, probably north of 80 million by now, and north of just about 100 transactions. So let's look at some of the examples here that we brought to kind of do a little deeper dive here on transactions. This is Crest Mechanical. I really like this transaction. This Crest Mechanical was founded 50 years ago. Yeah, it was by Silvio Breglio, hard-working plumber and heating mechanic. This is his son, Paul, third generation small business in Hartford, a light industrial application. So small businesses like this are really the lifeblood of our state. So this is what they did. They did a 55 kW solar PV roof-mounted system. That's all they did. This is unusual. Many of our property owners will combine solar with other measures like efficient lighting or efficiency. We like it when we see that. Now, I want to point out that on each of these slides, there's an error. And the error is that while the CPACE assessment is correct, the energy savings is not. It's actually higher than that. Discovered this. If you go to our website, www.c-pace.com, these are wrong. So there's actually savings that do exceed the assessment, and I'll give you the numbers here, and I'll have that website corrected. So the annual savings for Paul is $21,000. The CPACE assessment is correct at $12,000, and that savings and investment to investment ratio is 1.5. You'll notice in the left-hand corner it says incentives, ZREC. This is one of the important things about energy policy, or one of the great things about energy policy in Connecticut, is that we have many different policy pillars working together. So the ZREC is a 15-year contract that's offered by the electric utilities, so that there's a 15-year guaranteed stream of payments for the RECs. Now, it's not a set price, it's competitive. So every project that wants to get a ZREC has to bid into an auction. What that has done is the 15-year price of a REC has fallen in 3 auctions from about $165 now to about $80 or $75. So that's the competitive marketplace at work, as well as you will see most of those projects have now come into our PACE program. So that's government policy. You know, many times government doesn't work. I'd like to say this is an example where government works. Here's another example in sports in Trumbull, Connecticut. I'm mentioning these towns because really PACE is going all over Connecticut. All of these towns are picking it up. A 250 kW solar PV system plus efficient lighting. It was $1 million project. I didn't mention before, but the last project, you might have seen the numbers on the Breglio project. That was $145,000. So it's a bit bigger. In sports is one of those, you can see it's just a large gymnasium. They have racket sports and things of that sort. Nice family activities. $1 million project, 20 years, 5.5% financing, so 100% financing for Peter, and saving $92,000. Here we go. Saving $92,000 with an SIR of 1.1. Also has a ZREC. So for not-for-profits, it also applies. PACE is also great for not-for-profits. We get a lot of questions about that, saying, well, not-for-profits don't pay property taxes. Well, that's true in most cases, but the way it works in Connecticut is all you need is a tax ID at your municipality, and that process allows the municipality to put an assessment on the property for the financing to work. So with the Y, there was no solar PV here. What they did was they put a combined heat and power system in, a cogen system with efficient lighting and building controls, a $373,000 project. And again, the savings up there, they're understated. They're actually $34,500, and that was 19-year financing at 4.94%. A little odd interest rate there. We have a combined heat and power statutory benefit that the Green Bank administers. That program has run its course. but it enabled us to get the interest rate down from the standard 5.5% to under 5. And the last one I want to point out, because just to show you the diversity of property types here, this, if you go up I-95 in Connecticut, you'll see this building. If you're going north, it's on the left-hand side, downtown Bridgeport, 855 Main Street. And this property was purchased by the Spinnaker folks, property developers, and this is a $2 million project. They did just about everything here. They did, you'll see, variable speed drives on pumps and chillers, fan-powered VAV boxes, whatever VAV boxes are. You guys, and there are some of you will know what that is. New cooling towers, digital controls, and it doesn't say up there, but they also did windows. So a complete skin of the building redo and that project cost is wrong there too. It's a $2 million project, and they're saving $241,000 a year. An SIR of 1.55 and an assessment of $166,000. So you can see here a diversity of properties, a diversity of owners, diversity of projects. It really goes to the benefits that you can get out of PACE in your state. So let's just recap here. So PACE, I call it a win-win-win. I can't see who loses here. There are no losers. It saves energy, economic development, as David said. These jobs cannot be outsourced. It takes local labor to do all of these improvements on the property. You also have engineering that has to go on many of these. Some of these jobs are simple. They could be one measure. It could just be changing out a boiler. But many of them get more complicated than that. Municipalities benefit. Not only are there local economic development benefits, but something that's a hidden, a bit of a secret is that all of those building permit fees are substantial. A project like that $2 million project, that has permit fees of like $30,000 or $40,000 that are collected by the municipality. That was a home run for the municipalities. They never saw that coming. Of course, I knew that was going to happen, but you don't want to sell something before it happens. Improved collateral, I mentioned about that. That really means that the lenders love it. Sustainability is increasingly in demand, meaning that there are tenants that are increasingly looking for buildings that are green and that are more respectful of the environment, reduced emissions and better climate conditions for your workers, as well as your customers. So we just love PACE, the entire market does. The capital markets love it. We're having no trouble raising financing for PACE. So if you want more information, go to that URL up there and feel free to give me a call. Thank you.
You can see why it's really hard to limit the input of people like Bert and David and now Andrew. And while we had anticipated we'd have time for a lot of Q&A, I'm going to let Andrew do whatever you have to do. And because the information is, needs to be shared, I know you have questions. The next panel, there won't be presentations like this. There'll be a few minutes that each of the presenters will say who they are and some of the highlights. And then we hope more of the time will be devoted to Q&A. The other thing is that if you do need to use the restrooms or get some more coffee or something, we're not taking a break. This is being live streamed. We didn't want to make that break, and also there's just so much information that we wanted to get to. So sorry about no break, but please do plan to stay after 12 when we end, and we'll have some refreshments in the foyer here, and there's a cafe upstairs on the main floor. You're welcome to have, stay for a couple of hours, and it's much cooler in here than it is outside. So here is Andrew.